Did you receive a Form 1099-DA from your cryptocurrency exchange or wallet? If you did, we're going to run through what is 1099-DA and what you should do about it. Real quick, I'm David Kemmer, co-founder and CEO of CoinLedger. I've been working in the crypto tax space for over 8 years now, and I wanted to put together this brief presentation just to help eliminate the confusion and uncertainty around what's going on and hopefully can help you answer some questions. So let's get into it. What is 1099-DA? So first of all, 1099s, generally speaking, they're used by the IRS as an enforcement mechanism, and they report non-employment related income to both the taxpayer and the IRS. So for example, you might be used to getting a 1099 from your stockbroker. Let's say that's like Robinhood or E-Trade, and that 1099 shows you your gains and losses that you had incurred trading stocks. Well, now the same form is coming to crypto under the name of 1099-DA or digital asset. And as you may have guessed, what this form is doing is it's reporting on the income that you generated from your digital asset activity on your centralized exchanges, the Coinbases and Geminis and Binances and Krakens of the world. And so tax year 2025, which those taxes are due in April 2026, is the first year that brokers like Coinbase are required to send out these tax forms to, again, both you, the taxpayer, the person who's trading and buying, selling on Coinbase, and they also send an identical copy to the IRS. On your 1099-DA, you will see a number of fields, but the most important ones are going to be, it's going to include a description of the property that you sold, the digital asset you sold, for example, Bitcoin. It'll say the date and timestamp that you disposed of that property. It'll have on it the cost associated. This is otherwise known as your cost basis, how much you paid for that property. And then your proceeds, how much the property was worth when you disposed of it, how much you received for selling or trading it away. Now, we'll get into it further, but not all of these fields will be complete for tax year 2025. So let's dive a little bit further into what will be reported versus what won't be reported on 1099-DA. So for the 2025 tax year, exchanges are only required to report your proceeds to you and the IRS. They do not need to report your cost basis information on your disposals. For the 2026 tax year, again, so those taxes would be due in April 2027, exchanges are required to report both proceeds and cost basis, but only for what's considered a covered asset. A covered asset is any asset you purchase inside the CeFi centralized exchange after January 1st, 2026. Covered assets do not exist at this point as we've not passed January 1st, 2026. After this date, exchanges are 100% responsible for keeping track of cost basis of covered assets. Non-covered assets are basically any assets that's not covered. For example, any asset you purchase before January 1st, 2026 at any CeFi exchange, or asset that is transferred into a CeFi exchange from a self-custody wallet or a different exchange. And you are 100% responsible for keeping track of non-covered assets. And obviously, this can be a lot if you have a lot of DeFi activity, a lot of transactions going to and from your self-custody wallets. So that will fall to you to track those covered assets even post January 1st, 2026. So to summarize, for the 2025 tax year, your 1099-DA is most likely not going to include information on your cost basis, which is very important for reporting your gains and losses. Most will only report your proceeds, which is how much you sold the crypto for on that exchange. So for example, let's say in 2025, I had just one transaction that I did on Coinbase, and it was a sale of 1 Bitcoin. At the end of January, around that time frame in 2026, I will receive a 1099-DA from Coinbase saying, David Kemmer sold 1 Bitcoin, let's say in July of 2025, cost basis blank, proceeds, let's say $110,000. So that proceeds amount, $110,000, will get reported along with this 1099-DA to me, I'll get a copy, and to the IRS. Now, the important part that we'll get into here more is that you don't owe taxes on your proceeds. You owe taxes on your gain or loss, which is your proceeds, how much you sold it for, minus your cost basis, how much it cost you to originally acquire that Bitcoin. If I acquired that Bitcoin for $100,000, my taxable gain is $20,000. But 1099-DA in 2025 especially is not going to list that gain or loss for you. It's up to you to calculate it on your own. Okay, let's quickly talk through 1099 DA matching, or in other words, how the IRS catches you, how they use these forms as an enforcement mechanism for tax reporting. So the IRS has used the 1099 system for a long time. And basically what happens is they, again, receive a copy of your 1099 with your taxpayer identification information. And then they use that 1099 to match what you report on your tax return whenever you ultimately file your taxes. And they have a system that looks to match, okay, this 1099 that we got on behalf of David from Coinbase, does it match what David reported on his tax return? If it doesn't, we're going to send David an automated notice saying, hey, why is this discrepancy? Explain it to us or correct it. So again, let's run through a quick example. Let's say in January 2025, you sold one Bitcoin on Exchange A for $100,000. Exchange A reports this to the IRS directly through Form 1099-DA, and again, you also get a copy. So if you don't report the exact $100,000 on Form 8949, which is the form that's used to actually report your capital gains and losses on your personal tax return. Again, the IRS system can automatically detect this, and it may send you a tax notice asking you to correct your tax return or explain the reason for the difference. So why is this going to cause massive chaos and confusion in the marketplace? And there's a number of reasons. Let's hit on the most important ones. One, as I already alluded to, most exchanges will report zero or nothing in the cost basis field for the 1099 DA because they're not covered assets. They don't legally have to report this in tax year 2025. So again, a simple example, let's say you transfer in $10,000 worth of Bitcoin from your cold storage to Coinbase and you sell it. Again, Coinbase is going to report $10,000 of proceeds and $0, or won't even fill it out, the cost basis field. So it just says sold $10,000. And so that means if you don't have the records on your side to show what your cost basis in that Bitcoin was, let's say it was $5,000, you could be on the hook for the full proceeds, $10,000, instead of just the associated gain or loss, which in this example would be $5,000 capital gain. So that's number one, is these forms aren't going to include cost basis information. So it's up to you, the taxpayer, to track that cost basis information and have records of it. Reason number two why this is going to cause chaos. Again, mismatches between the 1099 DA and the taxpayer's 8949, which is the form that actually reports gains and losses on your tax return. So this is what I alluded to. This is what the IRS uses to match between what was reported by the exchange versus what ultimately was reported on the user's tax return. For example, let's say your exchange reports $50,000 of proceeds from, let's just use a Bitcoin sale again, but on your 8949, you report it as $49,200. This is super common. It's going to happen all the time because accountants and crypto tax software companies, everyone uses slightly different data to calculate what XYZ coin was worth at the time of sale. And so the proceeds, what the exchange reports versus what your crypto tax software platform or your accountant or what you manually report can slightly differ between these 1099 DAs versus your records. Again, things like manually editing data, missing transaction data, and different price sources can lead to these minor discrepancies all over the place. So if what's reported on your 1099 DA differs from your records, there's a couple things you can do, and I would recommend reaching out to your tax professional or to our team here at CoinLedger. But the most conservative would be to ultimately match what the 1099 DA is reporting. So let's say, again, in this example, you would adjust your records to match the $50,000 of proceeds. This could mean you're overpaying taxes slightly, but it could be worth the peace of mind. Alternatively, you could rely on your books and your records or your crypto tax software's records and report the $49,200 as proceeds. And this approach is fine as long as your records can prove that amount in the case of an audit. Now, again, this video is meant for general informational purposes. If you have specific tax advice questions, reach out to your tax professional. Number three, why this is going to cause chaos is not all taxable transactions will get reported on your 1099 DA. So 1099 DA will report anytime you sold crypto for cash or anytime you traded one crypto for another, because these are each disposals of your crypto. And again, they will report the proceeds that you earned from that disposal. But 1099 DA will not show income from staking rewards, mining income, any DeFi activity, Lending or wrapping tokens, which can trigger taxable events. And so to accurately report your total gains, loss, and income, you need to have records of all transactions, and you need to report all of this on your tax return. So this will cause chaos because a lot of market participants will have no idea how this works, and they'll just assume 1099 DA captures everything that's reportable. And that's wrong because, again, staking rewards, miscellaneous income, DeFi, lending, that needs to get reported on your tax return, but it will not be reported on 1099 DA. Okay, so what should you do if you received one of these 1099 DAs and it looks completely wrong to you or you don't know what to do? So first and foremost, don't worry. There's literally millions of people in your exact situation right now, so you're not in trouble. You just need to accurately report everything. So to do that, aggregate all of your transactions from the wallets and exchanges that you use. You can do this by pulling the data directly from your exchanges and wallets. They all offer these data export features, and then you'll have that transaction data for your records. You can also use crypto tax software like CoinLedger to handle this automatically. But if you want to do it manually, you can do that as well. So then once you have records of every transaction from all of your wallets and exchanges, then you'll be able to track your cost basis when you transferred it from Coinbase to your Ledger cold storage wallet. And that is the key piece, because when you eventually dispose of that asset, you need to be able to have the cost basis number so that you can accurately report the associated gain or loss. Then once you've tracked all of your transactions across all of your platforms, you can calculate the gain or loss for all of your disposals whenever you sold or traded a cryptocurrency and report those associated gains and losses on Form 8949. So if you don't want to do this part manually, this is the pain point that CoinLedger was built to solve. So what you're going to do with CoinLedger is you're simply going to sync your wallets and exchanges with the platform. You can do that just with a few button clicks, as you can see here. Here I will just sync my Ethereum wallet, and all of my transaction data gets read off the blockchain and imported into my CoinLedger account. You'll repeat this process for all of the CeFi exchanges you use and the self-custody wallets that you use. Then you'll have records of all of your transactions across all of your wallets and exchanges. And because you have all of that data in one unit of record, you can easily track the gain or loss from every single one of your crypto disposals. Then you can go to your tax reports, download the tax forms that you need and send those off to your tax professional, or import them into TurboTax or TaxAct or whatever tax filing platform that you use. You also can track your portfolio once you have everything integrated completely for free so that you can monitor your gains and losses year round. So hopefully this information was helpful if you received a Form 1099 DA. If you have any questions, feel free to reach out to our team here at CoinLedger, and we'd be happy to help you sort through everything, as I know it can get a little bit confusing. So I hope everyone has a great tax season, and we'll see you soon.